Welcome back to another insightful video. If you're a startup owner or someone thinking of diving into the exciting world of entrepreneurship, today's video is for you. We're talking about the top financial challenges that startups often face and, most importantly, how you can overcome them to ensure your business thrives. Starting and running a successful business is no easy feat. Along with a great idea, innovation, and determination, the right financial strategies can make or break your startup. So let's explore the most common financial hurdles and practical tips to navigate them. If you find this video helpful, don't forget to like, subscribe, and hit that notification bell. Now, let's dive into the financial challenges every startup faces and how you can handle them like a pro. 1. Lack of sufficient startup capital. One of the biggest hurdles new businesses face is securing enough capital to get off the ground. Many entrepreneurs struggle to gather enough funds to cover initial costs, such as product development, marketing, and employee salaries. To overcome this, consider exploring various funding options. Bootstrapping. Use your own savings to finance the early stages of your business. Angel investors. Seek out wealthy individuals who provide funding in exchange for equity. Crowdfunding. Platforms like Kickstarter allow you to raise money by offering rewards or equity in return. Grants and loans. Some government programs and financial institutions offer loans or grants for small businesses. Having a solid financial plan and a clear idea of your funding needs is crucial to securing the right type of investment for your startup. 2. Managing cash flow. Cash flow problems are among the leading causes of startup failure. Running out of cash can be detrimental to your business, especially if you don't have a buffer for unforeseen expenses. To address this issue, start by creating a cash flow forecast. Track your income and expenses regularly, and ensure that you're setting aside enough funds for ongoing operational costs. Invoice promptly. Make sure your customers pay on time by sending invoices promptly and following up on overdue payments. Negotiate payment terms. With suppliers and vendors, aim for favorable payment terms, such as longer payment periods, to give you more breathing room. Maintain a cash cushion. Set aside a reserve fund for unexpected emergencies to keep the business running smoothly. Managing cash flow is about being proactive. The more awareness you have over your financial situation, the better decisions you can make to keep operations running. 3. High operating costs. Startups can easily get caught in the trap of spending too much too quickly, leading to high operating costs. These expenses can include rent, utilities, office supplies, software subscriptions, and salaries. To minimize these costs, look at ways to cut back on non-essential spending. For example, outsource tasks. Instead of hiring full-time employees, consider freelancers or contractors for specific tasks like accounting, marketing, or design. Negotiate with vendors. Reach out to your vendors and negotiate better rates, or seek alternative suppliers who offer lower prices for the same quality. Leverage technology. Use cloud-based software for project management, communication, and finance to keep costs low while enhancing productivity. Startups need to be frugal in the early stages to avoid running into financial problems. By closely monitoring your operating costs and making smart decisions, you can ensure your business remains financially stable. 4. Inconsistent revenue streams. Many startups struggle with inconsistent or unpredictable revenue, especially during their first year. Whether it's seasonal fluctuations or difficulty securing repeat customers, this inconsistency can create major challenges in financial planning. To overcome this, focus on diversifying your revenue streams. Here are a few strategies. Recurring revenue. Offer subscription-based services or products that generate steady, predictable income over time. Multiple products or services. Don't rely solely on one product or service. Introduce new offerings to appeal to different customer segments. Strategic partnerships. Build partnerships with other businesses to cross-promote services or share customer bases, increasing the likelihood of stable sales. Diversification not only helps smooth out income fluctuations, but it also makes your business more resilient to market changes. 5. Poor financial planning and forecasting. Without solid financial planning, Startups often find themselves caught off guard when it comes to managing their finances. Inaccurate forecasting and lack of budgeting can quickly spiral into financial trouble. To overcome this, develop a detailed financial plan that includes revenue forecasting. Predict how much income you expect to generate based on your business model and market trends. Expense budgeting. Outline all fixed and variable expenses to ensure that every dollar is accounted for. Profit margins. Keep track of your profit margins to understand how much you need to earn to cover expenses and generate a profit. Regularly review your financials and adjust your plan accordingly. Financial planning is a dynamic process, so it's important to remain flexible. 6. Difficulty in securing credit. Access to credit can be a challenge for startups, especially for those without an established financial history or strong business credit. A lack of access to credit can limit your ability to scale your operations. To improve your chances of securing credit, build business credit. Open a business bank account and get a business credit card to begin building a credit history for your company. Show strong financials. Demonstrate to potential lenders or investors that your business has a solid track record of revenue generation and consistent cash flow. Offer collateral. If possible, offer collateral in exchange for loans. This reduces risk for lenders and increases your chances of securing funding. Having access to credit can make a huge difference in the growth and sustainability of your startup, so take steps early on to build your financial credibility. 7. Over-reliance on personal finances. Many entrepreneurs make the mistake of relying too heavily on personal finances to fund their startups. While bootstrapping is a viable option, it can quickly lead to financial stress and, in some cases, personal bankruptcy if the business doesn't succeed. To avoid this, separate personal and business finances. Set up separate business accounts and credit cards to clearly distinguish between your personal and business finances. Limit personal investment. Only invest a portion of your personal savings into the business and avoid using personal assets as collateral for business loans. Seek external funding. Look for external investors, grants, or loans to minimize the personal financial risk involved in running your startup. Financial independence between personal and business accounts is crucial to managing both areas effectively and reducing risk. 8. Unforeseen tax liabilities. Many startups fail to account for taxes, which can cause financial strain if they aren't properly planned for. Tax liabilities can include income tax, payroll tax, sales tax, and other local or state taxes, depending on your business location and structure. To avoid tax troubles, follow these steps. Hire a tax professional. Work with an accountant who specializes in business taxes to ensure you're filing everything correctly. Set aside tax funds. Regularly set aside a percentage of your income to cover tax liabilities, so you're not caught off guard when taxes are due. Stay informed. Make sure you're aware of any changes to tax laws that could impact your business. Effective tax planning is essential to running a financially healthy business and avoiding unnecessary surprises down the line. That's it for today's video. These financial challenges are common, but they are certainly not insurmountable. With the right strategies, careful planning, and determination, you can overcome them and build a thriving, profitable startup. If you enjoyed this video and found it helpful, be sure to like, subscribe, and hit the notification bell so you never miss our latest tips on achieving financial freedom and entrepreneurial success. Thanks for watching, and we'll see you in the next video. Stay motivated, stay focused, and remember that every challenge is an opportunity for growth.